Hello and welcome to Rajya Sabha Television. You're watching a brand new edition of Policy Watch with me, Frank Pereira. Economic activity in the country lost some pace amid GST-related disruptions, but underlying growth momentum remains strong and the country may clock 6.7% growth this fiscal, says a Morgan Stanley report. India's economic growth slipped to a three-year low of 5.7% in April-June, underscoring the disruptions caused by uncertainty related to the GST rollout amid slowdown in manufacturing activities. On a calendar year basis, Morgan Stanley now projects growth of 6.4% and 7.4% in 2017 and 2018 respectively, as against 7.6% and 8% previously. The revised new financial 2018 and fiscal 2019 growth estimates are at 6.7% and 7.5% respectively. According to Morgan Stanley, demonetization and GST had led to a deceleration in growth momentum. On this edition of Policy Watch, we will analyze if the worst is over for the Indian economy. Joining me on the program today are Sandeep, Bamzai, Editor-in-Chief, Financial Chronicle, and Professor N.R. Bhanumurthy, National Institute of Public Finance and Policy. Thank you, gentlemen, for joining me on this edition of Policy Watch. Sandeep, Bamzai, I'd like to begin with you. Do you believe the worst is over as far as the economy is concerned?
Well, for all practical purposes, most economic parameters are still down. I would like to believe that the underlying growth, as you said, is improving. And I would also like to believe that the rapidly decelerating economy over the last 18 months is finally gaining some traction. But if you look at the big picture, and I won't get into micro details, but if you look at the big picture, if you look at manufacturing, 1.2%, down from 5.4, 5.3% in the previous quarter, down from 10.8 in the corresponding quarter, which is a significant drop. Services contracted to a 4-year low. Index of industrial production, 4-year low. Agriculture, which is always something that provides the tipping point whenever GDP growth crosses 8.5%, also down from 2.5 to 2.3%. The drought in South India for the second time in this calendar year. We saw it in the winter, we're seeing it again. Floods have wreaked havoc in most parts. So, yes, automobiles are excellent. Maruti itself has clocked something like 26%. If you look at Hero, they've sold a record 679,000 motorcycles in a month. But that's not important. I think if you look at what Honda has done, which is, it has sold a record of 622,000 motorcycles. It tells you that the old economic theorem of economic activity moves on wheels is robust. That part of the economy seems to be doing extremely well. Cement prices were hiked by 25 rupees in the western part of India for a 50-kilogram bag, which seems to suggest that construction activity is perking up. But big picture is still not particularly bright, and I hope the monsoon, for whatever it is, will provide the necessary momentum. Tractor sales again have been very good, very sound. So if consumption begins to pick up, which apparently is picking up, and FMCG, automobile, etc., starts moving up, then I hope that the numbers will return to what is called normal. But the economy has to reset itself in a big way, because we are looking at a 13-quarter low, which means that in the last 3 years and a quarter, ever since the BJP has come to power, this is at its lowest.
Okay, fair enough. Professor Bhanumurthy, growth estimate to 6.7% as far as Morgan Stanley is concerned. Where is the growth going to come from?
Well, I think I agree with the Morgan Stanley report that bad days are almost gone. And I think the economy is already bottomed out, particularly after a big policy, decisions like demonetization and GST. So, given that these two, episodes are behind us, one should expect that recovery should happen across the sectors.
Across the sectors, okay.
I mean, I'm not talking about agriculture, but definitely the industry, and service sector, because these are the two major sectors which have been affected by GST implementation. I would expect that the recovery should happen across the sectors. But more importantly, even if you look at the first quarter numbers, the government's decision to prepone the budget so that the fund flow mechanism to the states and social sector programs or for the capital expenditure can be speeded up. That seems to have worked out to some extent. If you look at the quarterly numbers, that is one sector, particularly the public administration and the government community personal services, seems to have taken slightly showing up a little bit compared to other sector. So overall, I would say I think the recovery will happen largely due to the public expenditure and public investments, and also because of
so the onus is going to be on the government still.
Well, I think governments still have a lot of role to play, particularly when the private investments are still got stuck. But I think the private investment got stuck largely because of ambiguity surrounding GST and all those things. So once that ambiguity goes, and once the government doesn't tinker too much on the GST rates, so there will be some better clarity on overall doing business. I think that should help revival in investments both in government as well as the private sector.
Sure. Sandeep, Bamzai, as far as the sectors to watch out for, what do you think are the sectors to watch out for over the next few quarters?
See, government spending is obviously kicking in, and that's what is reviving the growth momentum. But if you look at roads, highways, the number of projects given out and the actual delivery, and even if you look at the reshuffle that the Prime Minister conducted, there is clearly execution peril at hand, and that is precisely why he has chosen to bring bureaucrats in, because he believes that rollouts and delivery will improve. He's bumped up several ministers because, again, he believes that they are people who will deliver the goods. He is clearly concerned about what we are discussing, which is the growth momentum and where does the growth come from. So obviously automobiles will provide the growth both on the passenger car side and on the two-wheeler side. And in fact, if you look at tractor sales, if you look at truck numbers, LCV, even those are showing a distinct improvement. Escorts is doing very well. Sonalika tractors is doing very well. Ashok Leyland has started doing well. So if you look at detailing, this provides the detailing to what is a bigger patchwork quilt. Consumption, again, FMCG and on the rural side, that is where the growth is going to come from. Cement, construction is again something where the growth will come from. But you cannot underscore the importance of government spending. I'll tell you why. Because the biggest challenge at the moment to growth comes from weak investment demand. Right. And investment demand is 30% of your GDP. Yes. There is no revival in investment demand. There is no revival in capital formation. All the companies remain indebted and on the heavier side. So there is no new capex, no new capital expenditure, no new spending. Now, it is then incumbent on the government to pump in more money. Now, look at, I'll give you an example, the Pradhan Mantri Gram Sadak Yojana. It is an outstanding success. Yet, highways and road building is more or less static. Contrary to popular perception, only 1,863 kilometers has been delivered in terms of roads. But on the Pradhan Mantri Gram Sadak Yojana, the numbers are humongous. And it is one of the single most important achievements of this government because that is where the connectivity comes from. That is how the farm produce gets to the mandis, etc. So it is, I mean, there are hits, there are misses, but my own sense is that automobile, I mean, this flip-flop, for instance, what is a mid-size sedan? Is it over 4 meters and under 1500 cubic capacity, or is it over 4 meters and over 1500 cc? So that clarity has to come, and now I believe the GST Council will meet on September 9th, and this is one of the issues. So you cannot categorize a Toyota Etios or a Honda City or a Maruti Ciaz as a luxury car.
Yes.
The growth, the momentum that is coming, you will kill that industry completely.
Sure.
That's what when I said the tax and the tax structure.
Indeed. You know, manufacturing and agriculture going forward, will it still be a concern for us?
Yeah, I think agriculture definitely seems to be a major concern this year, as Sandeep already pointed out. That the dispersion of rainfall this year seems to be very skewed. In a sense, some places you see droughts and some places you see floods. I think that is definitely a major cause for concern. Even a state like Madhya Pradesh, that was growing at more than 20% on an average for the past 5-6 years, they seems to be facing a drought condition. In a sense, there is a severe issue in the agriculture, but in any case, we don't have much control on the agriculture because of the rainfall and all those things. But when it comes to manufacturing, I think whatever the manufacturing sector was demanding, right? Even the economy is demanding. I think the government has done everything. I mean, you take any reform that we talk about, they have done that, except that labor and land. Which is we know that it is part of concurrence list. So there's not much of action happened on that particular side. Otherwise, I think most of the reform that the manufacturing sector was demanding was taken up. I think you take the bankruptcy code, or you talk about GST, you talk about now the FDA and many kind of areas. So my guess this year, is that one channel that is going to help us recover is the confidence channel, particularly when we did all these reforms, particularly when there is a stability in the other macroeconomic indicators like inflation and other things. So exchange rate or external account, there is a lot of stability in that sector. So given that kind of a thing, one should expect more investment coming from abroad rather than depending on the domestic investors.
But SEBI has its eyes on that too.
Well, yes. I think that is something we need to really correct it as soon as possible. Otherwise, again, we will be closing the doors for the foreign investors.
Sure. Yeah. One quick closing comment. I've got time for one comment on the program. 6.7% growth forecast. Do you believe that is realistic, or is it an overestimate or an underestimate?
See, you're talking about a 1% growth over what we just saw in the quarter.
April-June, yes.
April-June quarter. 1% can easily come, but again, you have to unfetter yourself.
Is that going to be the new normal? 6.77, 7.1, 7.2?
No, my own sense is 6% is a given. This country can grow at 6% on its own. Please understand that. Policy impetus, formulations, execution, rollouts, delivery, etc. And then, of course, agriculture, most important. If you look at the years where GDP has grown over 9%, look at how agriculture has grown. Every single year, if I'm not wrong, agriculture has grown at 4%.
Right.
The tipping point, you can keep arguing that, services is this and manufacturing and Indian economy has changed its contours, etc. The fact that India resides in its villages, the fact that majority of this country remain dependent on agriculture, the tipping point always comes from agriculture.
Sure.
My worry about agriculture is that there is a major price erosion in agriculture.
Right.
And we've seen that. Mansoor was something that emerged out of that.
Indeed.
That price erosion has to be arrested and prices have to be reset so that the agriculturist or the farmer gets what is due to him. It is very, very important and imperative.
All right. I'm going to close this on that note. Then Sandeep Bamzai and N.R. Bhanumurthy, thank you so much, gentlemen, for joining me on the program and putting things into perspective for us. Well, it's time for a short break now. Still to come, markets regulator SEBI is concerned about the flow of foreign funds into India. We'll discuss if the concerns are justified on the other side. Stay tuned. We'll be right back.
Art arisen from a multi-hued cultural canvas. Tradition and cultural fervour dating back centuries. And encircling them all, there's a magic that awes. Embrace your nation's brilliant human warmth. Watch Colours of India, Sundays at 9:30 p.m. on Rajya Sabha Television.
Welcome back. You're watching Policy Watch with me, Frank Pereira. The Securities and Exchange Board of India has voiced concern over the impact of foreign funds on the rupee. Foreign portfolio investors so far this year have made net investments of around 1.72 lakh crore rupees in equities and debt. Interestingly, they have shown a marked preference for debt, where they have invested around 1.29 lakh crore rupees. Investments in debts are nearly 3 times of equities, where net investments are 42,847 crore rupees. Speaking at a capital markets conference organized by industry body FICCI earlier this week, SEBI whole-time member G. Mahalingam said the regulators should be worried about the vast inflows and these should be allowed through a calibrated mechanism. In our next segment, we will analyze if the markets regulators' concerns are justified. Joining me on the program now is Harvir Singh, editor, Outlook Hindi. Thank you for joining me on the program, Harvir Singh. Are SEBI's concerns justified as far as, inflow of foreign money is concerned?
Actually, if you see, as you already mentioned, the major part of this money is coming into debt. And although that it is a big portion of this coming into this masala bond, which Indian denominated, rupee denominated debt basically for companies, particularly engaged into financing of this home loan and other some money also came used into refinancing of the earlier debt and all. So basically, when economy is not in a very booming phase right now, so your debt burden will go up. Even in the size, percentage size of the economy, your foreign liability will go up. So at the same time, even in equity, if it is coming in terms of equity, it means they are going to buy some shares and debentures from the. But now it is more and more portion is in debt. Everybody welcomes foreign flow of money, but at the same time, you see the flow is coming at a time when rupee is appreciating, means for dollar you are getting less rupee. So in terms of exchange benefit, it is not like that. So that's why the SEBI has some concern if something is really normal or some abnormal may be behind this. These are the issues SEBI flagged basically.
An appreciating rupee, like you yourself pointed out, is definitely a concern as far as our exports are concerned, and trade is concerned as well. What needs to be done to negate its impact?
As you already mentioned, that appreciating rupee, actually in some way it is good for us because we are importing a lot of things, like particularly our energy consumption is very high, and our crude oil and the ratio in our consumption is almost around 80% of the quantity we import. In one way, it is good because rupee is not weak, so we have to spend less foreign currency on this. But that is only one part, and other imports also may be cheaper compared to others. But in a country like India, cannot grow without booming exports, and at the same time, we have a lot of companies who takes benefit of depreciating rupee, this IT exports, software exports and all. So their income will also go down. Means it will have an impact on jobs also, or their expansion plan also. So when already we are struggling on this export front, and why China became such a big economy, the reason is that they have huge exports. They flooded the global market, and our biggest share in export in the global market, but our share is going down. At the same time, if you see the earlier numbers, it is not encouraging, and export creates not only gives you foreign exchange, at the same time it creates a lot of jobs. So when we are struggling to create more jobs in our economy, and domestic consumption can create jobs or can create market for adding more capacity up to some extent only. Beyond a point, you have to invest in manufacturing facilities for export purpose. But if that is not good, and appreciating rupee is really not a good sign for this export.
What immediate steps need to be taken?
I think one thing is that government should encourage exports anyhow, maybe through giving them low cost funds for export, and they will reduce the interest on requirement of the exporters, and some facilitation, and can reduce the time lag between this from manufacturing to the shipping place. So this is the basically they must focus more and more on export side.
Sure.
But at the same time, there should not be unnecessary actually interfere into this forex market, and let the market play its game. But something is really worrying, because you see, we are growing at the rate of just 5.7%. Our credit flow, the credit uptake is at a very lowest level in decades.
Yes.
Means nobody is going for a greenfield projects. So why this rupee is appreciating so fast? Even now, crude oil also is starting going upward. So then we have to spend a lot of money on that. At the same time, we are importing things, not only crude, but even now food products we are importing, a lot of fruit and vegetables we are importing, edible oil we are importing, pulses fortunately due to good production last year and farmers effort, and governments also encourage farmers by giving better minimum support price and all, so that we are saved there. So a lot of things are, and electronics and even in manufacturing. Now if you see, even normal products which are not very much have very persistent technology, and so even products like refrigerators and air conditioners and electric bikes, all are coming in components from China.
Yes.
So
yes.
Despite that, and we have huge trade deficit, despite that, rupee is appreciating.
Yeah. So that is indeed a concern.
That's why SEBI is talking on this. Maybe they
should this have been revisited earlier then? Is it a little too late now, or do you think it's at the right time?
Actually, you see, whenever you start making correction, always it is the right time. So you cannot say that earlier we should have done this thing that 6 months back or 4 months back or 1 year back. It is not necessary. Even if you see a few months back, even portfolio investment was going down, and a lot of these investors were pulling out money from the stock market. But your stock market was feeded by domestic investment, because interest rate went low. Another venue for investment was real estate in a very bad condition in the last 2, 3, 4 years, and another was this gold. So there is no appreciation in the gold in the last 2, 3 years. There was no attraction to invest in gold. So through mutual funds and SIP route, a lot of flow is coming to the domestic market, even despite pulling money from the stock market by foreign investors, FIs. So despite that, market is booming, market is at a very good level, but that is also a concern, because if companies are not making more profit and results are also not very good, so why the stock prices are going up? So that is also one area where SEBI should have a very close watch. And if you see, in the last few months, SEBI barred some companies from trading and all. Some strict action were taken by SEBI on this stock market side also.
Indeed. You know, you did mention China earlier. You believe that the Chinese model can be applied here in India. There was a talk a few days ago about applying the Chinese model as far as manufacturing is concerned, make India a manufacturing hub. Is that model really applicable to India?
Actually, if you see that to achieve a higher growth in the economy and to create more job opportunities in the country, again I am saying that you cannot depend only on the domestic market. It has some limitations beyond a point. So you need some inflow of foreign exchange, or you have to make profit from other countries, selling your produce or services to in other geographical area out of your country, so that more money will come. That was the thing done by China, but at the same time, they also invested a lot into technology. So here in our country, that is the I think the weakest point. Even industry, private industry, and even the public sector side, not investing a lot in technology development. If you see, it is not that China supplied garments and footwears and leather products and all. No, they are actually now they have a lot of market for your electronic gadgets and backbone of your telecom networks. Even for our country, many companies are using Chinese product and to give you the telecom services. So they went to all kind of side and created huge, even on the financial side, they have invested a lot of money into European countries and the debt in the debt instrument in US. So they have big power of finances also. But they created this through export. So technology development, we are lacking into it, even for small gadgets and all, and up to your to fulfill your defense equipments requirement, we depends on import. Why we do this? Why should not we create these kind of and produce these kind of products within our country, which will give more job opportunities to your countrymen?
Right.
So and at the same time, efficiency in manufacturing and efficiency on the logistic side to export. You see, in many cases, the production cost in our country is same like China or any other good exporters. But the product movement goes to this, is up to at the shipping level, it adds a lot of cost to that.
Right.
And it creates a disadvantage for our exporters, not only for domestic entrepreneurs, but those who have invested in our country and wants to use India as an export hub. It is also affecting them. So our port development, and you see, loading and unloading on the ports takes huge time.
Sure. So technology, infrastructure and efficiency is what we need to concentrate on. Harvir Singh, thank you so much for joining us on the program and putting things into perspective for us. That's all the time we have on this edition of Policy Watch. See you again next time.